Kevin, how many people do you think really know the different ways that they can hire an advisor for advice or investment management? I mean, what do you think?
When you say different ways, we're talking fees,
Yeah, we're talking fees.
how their advisor gets paid.
Hmm.
Oh, everybody loves talking fees. I don't know. I think that it's there's a lot of ambiguity out there, so I think we should talk about it.
Yeah, so I mean, from my perspective, there's the old way where it was commission based. You're selling a product. There's now this AUM relationship, kind of like what we have. There are some advisors that are charging maybe an hour or a flat fee type arrangement. Let's talk a little bit about the history of Morton. I love the way that you tell that story. You've been here for 10 years now. Like, what do we do here?
Yeah, it's one of the reasons why I actually came here was the way that our firm is just we're pioneers, right? Lon Morton was a trailblazer in our industry, and one of the main reasons was he didn't want to get paid a different amount for the advice that he gave by selling different products. And so, back in the 70s and before, you would push product. And if you sold A or B, you made a different amount of money. And that was a conflict of interest. So he led into one of the first fee only advisory shops, meaning our clients can pay us a fee based off of the assets we manage. So you'll hear the term AUM, right? So the assets under management. And that bases the fee off of, a set amount. And it doesn't matter if you go into investment A, B, or C. And what I love is, unfortunately, Lon has passed on, but carrying on his legacy, we're now at a place in the world where AUM doesn't fit everybody. There's different needs or different models. And so a lot of clients out there are saying, well, what if I just pay a flat fee for advice versus, assets under management? And so we're actually kind of keeping that trailblazing mentality at the forefront and leading into that with our flat fee offering. So it's kind of, you've gone from stockbrokers picking investments, getting paid commissions to fees based off of advice and the AUM amount. And now we're going into that flat fee model.
Yeah, I've worked in a few different places in the industry. In many of the things that we did for the advice that we gave, it was a commissioned type service. We did have an AUM model. Then I transitioned from there to another very large institution. I won't pick on them and name their name, but oftentimes they would say, "Oh, you could go meet with your financial consultant for free, and it doesn't cost you anything." Right? And so we would be meeting with these clients of this company and giving them advice, but we were still incentivized to help them get their money invested in product A, B, or C, that would generate our bonuses. And so even though the clients felt like, oh, I get to go meet with that person for free, I don't think they often realized at times the conflicts of interest that were there. And so I've been here with Morton for about 8 years now, and I absolutely love the structure that we have, where our main structure is that percentage of assets under management. We're there to give advice and handle the investment management day to day. For clients that are just looking for maybe financial planning advice and they're doing the investment management on their own, maybe an hourly fee or a fixed fee makes sense for them. I don't know. There's a number of different ways that people can go about it. What are your thoughts about some of the other new ways that advisors are charging fees these days?
Yeah, fees are a part of this business, as a part of any business, right? When you're providing a service, you're providing some type of support, you should get paid for that. And I don't think one is better than another. I think what is the right fit for each individual. So, the term of like fees shouldn't matter. They only matter in the absence of value, right? So if you're getting the value out of a relationship for what you're paying, then the fee should be worth it. And to answer your question, I think understanding what you're getting paid and then again, what you're getting for that fee is the most important part. We're moving into a place where, again, going back to stock picking, those advisors, those brokers were analyzing each individual stock. So to make a commission made sense back in that day. Then we moved into where you're paying the AUM fee. And I think that made a lot of sense because it removed the conflict of interest. But what I think clients are seeing is their advisor is just putting them in a model portfolio. So they're taking their $1 million, they're clicking a couple buttons and it doesn't matter. They're going into the moderate or the balanced or whatnot. And they're like, well, why am I paying a larger amount if I give them 3 million or 5 million than $1 million if they're clicking the same buttons? So I think that's where the pressure has become, okay, well, where do you add value as an advisor? And it made sense. We did a lot of financial planning in the industry. There's now, just here we have help support with estate, with tax, with insurance. So we're adding value beyond just that portfolio. And now the new way of, okay, well, I don't necessarily need the investment advice. I just need that second piece. the flat fee really comes into play. And I really like that clients have that option. And as you know, there's a lot of distrust in the industry. So if I give somebody my portfolio and I'm paying an AUM, I'm kind of stuck there. But what if I dip my toe in the water? What if I pay a flat fee, build trust, and recognize that over time they're going to be able to provide more value than I can do on my own? That flat fee is kind of a safe to try mentality. It allows, again, kind of more of a customization of what that specific client's need is. So I'm really a fan of clients having that option.
Yeah, it is interesting. I mean, when you mentioned that, some firms or advisors might have that generic portfolio of mutual funds or ETFs and they're charging a fee for it, they better be out adding a lot of value in other areas. I think about even just the way that we do it. I mean, we're giving people access to some alternatives, whether it's real estate, some private lending, other types of things that they wouldn't be able to get access to on their own. Yeah. And so part of our fee offering is not only the advice, access to the estate planning, the insurance, the tax, but it's also access to a very customized, unique portfolio that you really can't get anywhere else. And so we're even looking at the services and investment products that we have available for our clients to justify the portfolio, because we're not just buying the S&P 500 and sitting on our hands.
Yeah, and then we also, to point out some of the downsides that we have to work through is, well, aren't some of these customized portfolios expensive, right? It could be cheaper. So there's the management fee, but then there's also the specific individual investment managers have their own fee. And if you go into mutual funds or ETFs, those fees can be a fraction of a percent. Or if you go into a more customized alternative, those fees can be a little bit higher. And oftentimes our clients are like, wait, so you're paying a fee to the manager, then we're paying a fee to you. There's these layer of fees. What we do, and we spend a lot of time on this, is, okay, what are you getting for that fee? Going back to the value. If you have somebody that is sourcing, food lending opportunities, that's just not something you can go on and do a little bit of research. You have to have deep expertise and a long history of experiences to understand how to run these food businesses, how to create a relationship with the government, the farm credit. So all of those things go into their expertise. The fee might be higher than a mutual fund, but what are you getting? What's the net benefit? So what are you actually getting in your pocket after paying those fees? And all of those things start making sense of, okay, does that fee justify access, diversification, cash flow, all of these other pieces? If the answer is no, if that manager is just sitting on the couch making money, then the fee's not worth it. So that's where we spend a lot of time, value for that fee, and making sure that we're providing those solutions to our clients.
It also reminds me of the conversation that we've had many times. You own an apartment building.
Yes.
And
still, unfortunately.
Right. And many times you're like, I just want to get rid of this and then go in with a group that specializes in it. They can get the phone call at 2:00 in the morning saying that they need to fix, the faucet or the toilet or, the washer or dryer. You don't want to have to deal with the remodeling, the evictions, the repairs. It's just become a mess. And so you're willing to pay a fee to kind of get out of one structure for another.
Yeah. And think about the diversification. I own one building in one city in one state, versus maybe 9, 10, or 12 different properties across the country and different assets of real estate, self-storage, multifamily. There is potentially upside to that concentration, but it comes with a lot of work and it comes with a lot of risk. So at some point, exactly what you're saying, I'd much rather pay that fee, have experts produce typically a higher return with less work. To me, it doesn't matter what the fee is at that point. If I'm making more and doing less, then it's worth it.
One of the challenges that I have with these advisors that are just charging the hourly or the flat fixed fee is that you're just getting paid for the financial planning advice, right? Then the portfolio management is on, the client or the person, because they're typically not, say, hey, pay me an hourly fee or a flat fee and I will manage a very customized, great investment solution that provides access to unique investments. They're typically not doing that as well. And so what I've found over the years in working with clients is that they rarely sell their winners to take some chips off the table to then buy their losers.
Yeah.
Instead, they look at, investment A, investment B, and they're like, all right, which one did well? Cool. Investment A did well. I'm going to sell investment B and buy more investment A. Yeah. Which is sort of the exact opposite of what you want to do to maintain diversification and buy things at opportunistic prices.
Yeah. So if I was to sum all of this up with why do you pay an advisor a fee? One, it's to do what you just said. It's to take that emotion out of it and help make sure that, investing 101, right? You want to buy low and sell high, but that's not how most of us act without guidance and support. And then the other piece to that too is the accountability. So most people know what they need to do, but then their life happens. So if you pay someone a fee for advice and they give you that advice and you have to act on it on your own, the likelihood of you following through with all of those things in a timely manner is actually pretty low. So that's the other thing that you run into with just the flat fee or the hourly rates. There's still work on your shoulders. And as we know, life happens. So having someone that can help you every 30, 60, 90 days, make sure that things are getting done, that's where the active management actually does help. The rebalancing is happening regularly. We're trimming and selling and moving. So again, there's a fee to that, but that value may outpace your performance may outpace you doing it on your own.
One of the hidden values that I see working inside this organization that, many clients and people probably don't realize is that in a lot of other institutions, your advisor is your person. They might work for a big institution with a lot of other team members, but they're rarely collaborating on behalf of you. It's really just that one person or that one team that you're working with. We have an internal Zoom channel where our team members put random questions or needs in that channel, and all of our team members chip in to help out. I mean, it could be anything from, does anybody have a good contractor because somebody's remodeling a bathroom, to I have a client that needs to buy a car. Does anybody have, a car broker, to a CPA in a different state or estate planning attorney. I mean, clients should realize that if they have a decision that they're making in their life, how much they can leverage us and the resources that we have at scale across 1,000 clients, it's pretty impressive to me.
Yeah. I think if you ask most of my clients, like, hey, who's your advisor? Very few are like, oh, Kevin. I think most are Morton, because you've sat in on a meeting and helped them with their executive compensation, or we pulled in a planner to help talk about tax, or, one of our analysts to talk about a specific investment. And so the beautiful thing here is you are getting the collaborative knowledge of everybody at Morton, whether it be the CEO, CIO, even, people that help with event planning. Like we've had clients ask us, where did you get that lunch order? And it's silly things, but it really does add a ton of value and hopefully justifies the fee beyond just the customized portfolio and everything else.
Right. So let's say that somebody is going to engage in a relationship, whether they're paying an hourly fee, a fixed fee, or an AUM fee. What are some key considerations? One of the things that always stands out is something called this fiduciary standard. Why is that so important versus the best interest contract that other brokerage firms sort of operate in?
Yeah, to me, this is actually probably the most important thing. So the fiduciary standard is you need to act in your client's best interest in all situations and at all times, versus more that suitability where it's that decision needs to be pretty much in line with what they're looking for at the moment the decision's made. But it also leaves a lot of gray area for, sometimes other firms can do makes them more money. As long as it's suitable for that client, they can pick the one that makes them more money. It's not in the client's best interest at all times. So I think that's really important when people are seeking advice, to know that there are advisors out there that legally their obligation is they have to do the best interest of that client at all times. So that fiduciary standard.
So if you're a registered investment advisor, RIA for short, which we are, you have to act in that fiduciary standard. If you're with a big brokerage house or brokerage firm, it's that suitability contract. It's like, is this suitable? Is this in the best interest of the client? But there's some gray area there.
And then on the other piece, I'm looking at the fees. There's fee only and there's fee based, right? So the fee only is you don't collect commissions. You don't get paid any other way other than from your client directly. So for us, we collect an AUM fee based on assets under management, but it doesn't matter what investment we go into, what professionals we recommend, any of these planning things. We don't collect additional compensation on, from making those recommendations. Where the fee based, you might have the portfolio be fee only, but then you're selling insurance and doing other types of financial planning and commission-based, strategies.
That's a good point between the fee only or fee based. I mean, I think what clients are more looking for is that transparency and to better understand the complexity of the lives that they have and the cost that it's going to be to them for the time savings, the investment management, the returns, the advice. I mean, oftentimes the biggest cost to people is how they react to their investments or their investment strategy during good or bad times. That can be the biggest cost. I know in times of extreme volatility, there are some clients that say, I want to sell out of everything and just go to cash. Well, how and when do you get back in? Sometimes that's a big cost that you can pay over time.
Sure.
Yeah.
So if I'm seeking an advisor, from my perspective, how do you get paid? What are your conflicts of interest? Are you acting in my best interest? and then what that fee is about approximately going to be. Am I getting enough value? Am I getting the support and the access and the things that I need in my life today to support my family and our goals and protect us from some pitfalls? So that's kind of as basic as you can get. But just again, the transparency is really important.
Yeah, I love the way that you summarize that. Kevin, thank you so much for joining me today.
Thanks for having me.